Hey, badass business owners, we need to talk. You're doing something that is hurting you and setting you up for failure, and you don't even realize it, but I think you do because you know you're doing it. You're choosing to do it. I understand why you're doing it, but you got to stop doing it. Now, what is this? Let's talk about taxes. This is the time of year that we all are looking at the fact that we've got to file our taxes, and then we got to ask ourselves, especially as entrepreneurs with our business, where am I going to come up with this money? The odds are you probably should have been paying money along the way. You know it, but you didn't do it. And by the way, even if this is in the future, this is in the middle of the year, you need to hear this because it's never too late to pull your head out your butt and start doing this the right way. Let's talk about this, okay? All right. If I had $1 every single time that a business owner I came across did not have any money set aside for their taxes, I'd be rolling in some money. I'd be having some money around me because just in the last couple of weeks, I've dealt with probably 10 or 11 different small businesses that have their taxes due and they have not a clue where they're going to come up with the money that they're going to need to be able to pay their taxes. And this is unacceptable. And I need to tell you why, because it's one of the number one reasons why small businesses tend to go belly up. And we need to have this dialogue. Part of your everyday thing, you've heard me say this, you need to have an account that only is for putting taxes away. You need to put in any sales tax that you owe. It's not your money. You're the middle person, right? Put that in there. You need to be taking a certain percentage of all the profits from the month and every month putting it into the tax account. You need to be paying those quarterlies. And even if you don't pay the quarterlies, at least you'll have the money at the end of the year because you're going to have a fine on top of it. And by the way, if you think, oh, I can just do an extension and then I don't have to pay till October, it's not the way it works. You have to pay all the money in April or in March, depending upon the type of business that you have. You don't get a pass on the money. You get a pass on filing the paperwork, but not on the money. And it's important you know this. First off, before we get much further, I am not a CPA. I am not a tax professional, but I know enough of how to keep you and myself out of trouble. And by the way, you're not the only one. You know what? When I first got into being an entrepreneur, I wasn't used to saving taxes. No, I thought, oh, I won't need all this money. And guess who ended up needing money? Guess who had to go onto a payment plan for a little bit to get that money caught up? And now, you know what? I'm religious about putting that money away because I don't ever want to go through that again. I don't ever want to owe the IRS anything. And it's no joke. You know what? The IRS will file a lien on any property that you have and anything that you've got, even if it's like $100 or $1,000 or if it's $100,000. They don't care. The IRS wants their money. And I know there's a lot of talk out there right now and buzz about what's going to happen with the IRS, this and that, what they're going to do. What you need to do, what you know you need to do, okay? And if money is meant to come back to you, that's great. Worst case scenario, you save some money up and you can have that money later. But you need to assume the IRS is going to want their money and you're going to need to pay it. And it's important that you don't get caught up in all of the junk that's going on and you don't get caught up in your own BS that you've been telling yourself. And I know how it happens. Like I said, you know what? The money comes in and we got bills to pay and we have things we need to do or things to grow our business and we go rob ourselves, right, to go pay for these things. And what happens is any money we've set aside for taxes, we spend it. We think it's like a savings account for us to be able to use and to tap into, and that is not the case. You need to change your mindset that any money that you set aside for taxes is not your money. It is the government's money. All right. Now, how much should you put aside? It depends, honestly. If you're on the lower end of the profit that you're going to take, you probably can get away with 15, 20% putting it away. And if you make tons and gobs of money, you need to save a lot more. But odds are if you've gotten to the point where you're making a ton of money, you probably have already learned this lesson the hard way and you already put away money in your checking account or a savings account or in some kind of high yield savings account to make some money off of it. Usually it's people that I run into that are either new, they're one of a couple things, right? Sometimes they're new business owners. They've been in business for only a year and they didn't even dawn on them that they needed to save up this money for the taxes, or they thought, oh, I'll do that later. And then later comes and guess what? They didn't save any money. But I've also run into people that haven't paid their taxes for 1, 2, 3, 4, going on 5 years. They haven't paid any taxes and now they're freaking out and they're like, oh my God, I owe all this money. Yeah, they're going to want their money. And by the way, there's interest and stuff on top of it. And in some cases, you're going to pay more in the interest and penalties than you are in the original taxes if you would have just filed them. It's very important that you get in that habit now. If you're starting your business, you start putting that money away now. If you've been in business for a year, start putting that money away now. If you've been in business for 3 or 4 years, start putting the money away. It's never too late to start. It doesn't matter when it is. You just need to start. Every month, as you know, I'm preaching to you, you need to have clean profit and loss statements. And you need to look at that profit and loss statement and say, okay, here's what my profit was. Here's the money that I probably took out as owner draws, right? All that kind of money needs to be accounted for. You're going to pay taxes on it. A lot of times the owner's draws are from that profit, so you're not going to double count it. But if you are tracking it in any other way, if it's not, think of it this way: any money you take out of the business or leave in the business is going to be taxed. That's another one. Sometimes people think that if there's no money in the business doesn't owe any taxes, and that's not true either. The business, if it made a profit, even if you took it all out, you need to pay taxes on it, okay? Everybody's tax situation is going to be different. If you're an S Corp or if you're not, if you're a C Corp, if you're not, if you're a solopreneur, if it just flows through to your personal taxes, or maybe your business has to pay taxes and you personally has to pay taxes. There's a lot of different things that are going on in there, but typically the people who are most likely to mess this up are people that are either a first-time S Corp, it's their first time being it, their first year doing it, and they just don't understand it very well, or a solopreneur where it all flows through to your personal account in your personal individual taxes, whether it's just you alone or with you and your spouse or whatever the case may be. But I'm telling you, if you've made, $10,000, $20,000, $100,000 in profits, you're going to have to pay the taxes on that. And I know I sound like I'm beating it, but I'm telling you, I'm amazed at how many people don't do it. It happens way more than you think it does. You think that, hey, more people save their money. They don't. Right. Like I said, just in the last couple of weeks, the number of people that I'm dealing with that are having to face the reality that their taxes are due and they don't have any money. So what ends up happening is they either have to go on a payment plan. And by the way, you don't get to stack those payment plans and every year go, oh, I'll just get a payment plan every single year. It doesn't work that way. You may have to do one the first year because you just don't have the money. But after that, you need to get in that habit of saving that tax money. You need to have an account. You need to have something separate that is labeled taxes. Put big exclamation points. Do not use. And that's the money that you pay your taxes with. It boggles my mind that we get burned the first time, that we keep doing it. It only takes one time for you to learn the lesson the hard way. So I am surprised when I run into people that do it to themselves every single year. And once again, I understand. I get it. You need the money. You can't afford not to take that money. I can fight that battle. You can fight that battle. The guy and the gal down the street can fight that same battle. When you need the money, you're going to take the money. When you have bills to pay, a roof to go, gas to put in the car to do it, you're going to do what you need to do. But it is a horrible plan, and it's one that is going to bite you in the butt. I'd rather see you spend more time figuring out, how can I become more profitable? How can I understand my business? How can I get more sales? Than robbing your tax account over and over and over. And when I see people that have made $50,000, $60,000, $70,000, $80,000 in profit and they don't have a dime saved, I know they're going to get their butt handed to them. They absolutely are going to get their butt handed to them. And by the way, when you're making that kind of money, the odds are you're taking home $5,000, $6,000, $10,000 a month and still not setting aside any money for taxes. You can't do that. Okay. And I know it really sucks because when you're an S Corp, at least you get to go on a paycheck and they take some of that money for you, right? So you set aside some of the tax money that you need to pay, and you forget that whatever else the business has made, you have to pay taxes on top of that. But for those of you that are solopreneurs who don't use payroll for your taxes, because you can't, right? You're not allowed to do payroll if you are a solo person. That money that you've been taking out, whether it's $3,000 or $10,000, has to be taxed. All of the money that the business makes after expenses is going to be taxed. And by the way, you can't just make up stuff and say, oh, I deducted it so I don't have to pay taxes on it. No, it don't work that way. You have certain things that you're allowed to tax. A lot of people go out there and go, oh, I can just eat out all the time and all that's going to be taxed and not taxed. Not true. Not true. It has to be a legitimate business lunch or dinner. And you have to be able to show who that was with and what you talked about and what was covered. And even then, some of those are not fully taxable. Sometimes it's 50% of what it is that you can tax. So do not count on food to be able to be the savior to save you taxes, because it doesn't work that way either. You know what? You've got to make sure and change something up here. It really is up in our head that we have to flip a switch that says, I am not going to lose my business, and I am not going to get an IRS letter that tells me I am a dum-dum because I failed to pay my taxes because I didn't do it. And I'm not calling you dumb. Please know that's not what I'm saying. I've been there. Like I said, I was that dum-dum. So, but we know in the moment that we have to pay our taxes, and we make a conscious decision not to do it. And then we get mad when we don't have that money later on. That's not the way that it works. And like I said, I know I'm preaching, and I know I'm probably sounding like a broken record, and I'm glad you're still listening and or watching. You need to. I need this lesson to get into your head. Please, whatever you do, save the money, put the money aside to pay your taxes. If you need to do it every time if you take in big checks, then every time you get a big check, take 20%, put it into that tax account. If you do a bunch of little things and it all adds up, go to the end of the month, look at how much money you took in, what those profits are, and put that away. If your bookkeeping is so bad that you have no idea what money you've made and what you haven't made, that's a different problem that still needs to be solved, but you still need to take a wild ass guess and put some money away, because that's when you need somebody like myself or a bookkeeper or somebody to go in and help clean that mess up for you, right? So this way you do know what you make, okay? Because sometimes people will, on paper, because they haven't been doing their books, looks like they made all this money and they don't know if they did or they didn't, because all they know is, hey, I just know the money that I took out of the business and now my bank account doesn't have anything in it. Well, that's a good place to start. If you look at all the money you pulled out and you pulled out $50,000 and your bank account doesn't have anything in it, it's safe to say that your profit is probably that $50,000, and that's probably what you're going to have to pay taxes on. So that's just a shortcut way. If your books are a mess and you need to know what you should be saving, that's another way to do it. But please do me a favor, all right? Set up an account for your taxes and put the money away. 2, if your bookkeeping is a mess, you need to get it cleaned up. All right. You need to get your bookkeeping cleaned up so that way you know how much you need to set aside every single month. If you have bad bookkeeping or you haven't paid your taxes in a year, 2, 3, 4, 5, it's going to cost you a penny to get those cleaned up. But I promise you, it's going to end up saving you more money down the road, because you're going to get all of that straight so you know exactly what taxes you need to pay. Bite the bullet, find out, take the penalty, do what you need to do to get on the payment thing or whatever it is, but fix it moving forward. There's no sense delaying it, because once you go 1 year to 2 years to 3 years to 4 years and keep going, the bigger that amount is going to be and the worse trouble you're going to be in, and you're going to lose it, because I'm telling you, they're going to come after you and they're going to put liens on your property, right? Or your business is going to shut down because you're going to owe thousands and thousands of dollars. They will work with you. All right. Get caught up, go see a really good CPA, find out how much money you owe, have them work some magic, get you on a payment plan. And then what I want you to do is I want you to make sure that every single month those books look good, and every single month that you are, paying your taxes, setting it aside, doing what you need to do. Okay. I'm going to stop preaching. I'm going to stop beating you over the head, but it's something I need to talk about, because like I said, I've said so many people have this so messed up right now over the last few weeks. And I can guarantee you that anybody that does some of the stuff that I do and they're looking at people's book, they're seeing even more. Like I said, I'd be rolling on a bed of dollars, like in that movie, throwing it, and I don't visualize it because that's bad for a lot of you. But you know what? That's what it would feel like, as if we had $1 for every time that you guys aren't paying those taxes. So we need to get those taxes paid. Okay. You can do this. Okay. You love your business. You want to run your business. You need to just do it right. And part of doing it right is handling these taxes the right way, and getting that tax account, putting that money in there, and just paying those quarterly taxes like you should, or at minimum having the taxes for when taxes are due. I'm going to stop preaching, because otherwise if I stay here on camera or with this microphone, I'm just going to keep talking and keep preaching it. I believe in it that much. And I only give this lecture maybe once a year. Maybe I'll do it twice this coming year to remind you if you haven't done it. Because right now you're going to go, okay, Tammy, I'm going to go do it. Some of you are going to need a reminder in a while. So I'll probably come back in 6 months and do it again. All right, I'm going to get out of here. You're going to pay your taxes. You're going to do what you need to do. Let's get your situation fixed. Let's get it caught up. Let's find out how much you owe. Let's get on a plan to get that taken care of. And then let's start putting that money every single month into that tax account so you never have to be in this situation again. All right, with that, I'm out of here. I'll talk to you next time. Bye for now.